Welcome back to the YouTube channel, guys. It is Coached by Chambers here. I just want to start off by saying Happy New Year to you guys that are tuning into this video. This video is going to be specifically on supply and demand and explaining to you guys what supply and demand is and how you can identify supply and demand inside of the markets to utilize it to your favor. So yeah, let's get straight into the video, guys. Before we do, I want you to drop a like on a like and a comment below if you do enjoy this video, if you get value from this video. Also, don't be afraid to share it to some of your trader friends, your trader groups, so that they can learn, the power of supply and demand, because supply and demand is what moves these markets. So I want you guys to really, 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 push this video out to help other people, learn exactly what it is. And also make sure that you've got the notifications on, make sure that you guys are subscribed. And I'm excited to deliver more content like this in 2025, but I need you guys to be a part of it. I need you guys to support this YouTube and the content that I am uploading as well. But let's get straight into this video. As you guys know, this video is simply about supply and demand and what it actually is and how you can utilize it to your favor on the markets on a daily basis. So let's get straight into what supply and demand really is. So let's scroll down. And as you guys can see, I've written it out for you guys to understand. What is supply and demand? Well, supply and demand in trading refers to the relationship between how much a financial asset like a currency pair, stock, or commodity is available, which is supply, and how much traders want to buy it, which is demand. So this relationship determines the price movements inside of the markets, inside of the financial markets. So understanding supply and demand zones is a core concept in technical analysis, and it helps traders identify key areas where price is likely to reverse, to stall, or also to break out from. So how does it work? Well, let's break it down to you guys so you can understand. Supply, as we refer to as selling pressure, that is what represents the willingness of sellers to provide an asset at a given price. So when supply exceeds demand, prices typically fall as sellers compete to attract buyers. So this can happen when there is a negative news. Obviously, negative news meaning the economy of that currency pair, overbought conditions, or a lack of interest in the asset. So demand, which we obviously refer to as buying pressure. So demand represents the willingness of buyers to purchase an asset at a given price. When demand exceeds supply, prices usually rise as buyers compete to acquire the asset. So high demand is often driven by a positive sentiment, strong economic data, and undervalued assets. And then we also have balance, so a balanced market. So the market is in a balance between, supply and demand, which means it's equal. So the supply and demand is at an equal balance. During these times, prices usually consolidate or move sideways. So a lot of you guys on here has most likely seen when the market's consolidating, when it's moving sideways, it is not really giving you an uptrend or a downtrend, or what we refer to maybe as a breakout. Understand that we are in a balanced market, and that balanced market is where the supply and demand are basically equal. Traders identify supply and demand zones on the chart to predict potential price reactions. A key time frame for spotting supply and demand areas is the daily time frame, with further refinement often done on the 4 hour and also the 1 hour time frame. So today I'm going to be showing you guys two, obviously, these two on the screen, which is a supply and demand zones, explaining what it is. But then I'll also go into, some of real time frame, real markets, so that you guys can actually see it as well. But just to explain in a little bit more detail what a supply zone and demand zone actually is. Starting off with supply zone. A supply zone is a price area where selling pressure outweighs buying interest, causing a price to fall. So these zones are typically identified by analyzing market structure, very important, and then focusing on the last buy candle before selling pressure broke previous lower low. Or it can also be a consecutive candles. It doesn't have to necessarily always be one, but it could be one, two, or maybe even three, depending on the area. But it's very important that we understand market structure and also focusing on there. on that candle, that area where that is what broke the previous lower low, creating a new lower low as seen in this picture below. I know it's obviously easy to look at one of these, but this is what it will look like. You know, you'll be able to see that the price naturally pulls back to the supply areas. So we have a break of a previous lower low, and then we naturally pull back into a 4-hour supply area, and then we continue that downwards trend onwards. So like right now, we would be expecting in this situation is to identify our 4-hour supply area through the daily time frame, 4-hour time frame, and maybe even a 1-hour time frame. And then we'd be expecting a 1-hour uptrend to obviously happen into that supply zone, which is then going to potentially continue the downwards trend from the supply zone to carry on and break that last lower low and create a new lower low. So hopefully that is easy enough for you guys to understand. And obviously it's the same exactly for the demand area. So a demand zone is a price area where buying interest is strong enough to outweigh selling pressure, causing the price to obviously rise. These zones are typically identified by analyzing market structure, same as supply, a supply zone, and focusing on the last sell candle or multiple sell candles before, obviously buying pressure broke the previous higher high, creating a new higher high. As seen below, you'll be able to understand that the price naturally pulls back. So we come up into a demand, we break this higher high here, and then we naturally pull back to the demand area before moving away and creating a new higher high. So again, if we're looking at this right now, we can see that we've got a higher low, a higher high. This is our range, and we need to identify what our 4-hour demand area. We can obviously do that by looking at the daily 4-hour time frames, and then we expect to see a pullback, which will be a downward trend on the 1 hour into our demand area, and then that to continue words to create a new higher high in an upwards trend, of course, and break this previous higher high. So hopefully that makes sense from an easier perspective of seeing it through just drawing on the charts. Now, obviously, what I want to do is I want to go into, understanding it from a perspective of actually looking at the chart so you guys can see it in a real life. So as you can see right now, we're on NZUSD and we're currently in a downwards trend. It's quite easy to see that we are obviously in, massive momentum, downwards. So with that being said, we are obviously going to identify the trend and also identify them supply zones. So supply is where, we're obviously looking at the markets to pull back into them zones and carry on the downwards trend. So let's start from here. You'll be able to notice that from this area right now, we had obviously this lower high and this lower low. So at that point, this is my range, this lower low and this lower high. Where can we see the market come back into? Well, first thing I can notice there is the market comes back into what? This last buy candle before, let me just make this last buy candle before the market did what? Before the market moved down and broke this last lower low. So as you can see this last buy candle caused this whole momentum to break this last lower low and also this break of structure. So we come back into this 4-hour supply area, this last buy candle, which also has imbalance in between, which is another confirmation. And that is what caused the market to break this next lower low. So you guys can see the first area here. So you can see this first area here. So let's break this down. So you can see now we've had a break of structure from this low here. Now it's about identifying where does the market come back into? Where is the market come back into on the next supply area? So again, lower high, lower low, we come back up into this 4-hour supply, this last buy candle that caused this movement down. And we come back up, we mitigate this area, and then we move away. Now, from here, my range is obviously going to be from this last high to this low here. So that is my range. We've got this area here to this area here. So we expect the market to obviously come back up and then move away. So where can you see that the market comes into? Well, I always say, can you see the last, can you notice the last buy candle that also has you know, significant movement away from it. So first thing that draws my eye is this area here. This area here, because I noticed that this is where we come into here. So if you notice, first and foremost, even though we didn't this area we tap into, which is our next 4-hour supply, because that is our last buy candle. So we come up before we break structure, we do come up and then we broke already. So that is one 4-hour supply, but that is not valid for you to take. That is a valid supply area, but it's not a valid supply area for you to take, because you want to see a 4-hour supply area met after it breaks structure. So that is a 4-hour supply, but not what we look out for. Now, the next thing I can notice is these two last candles here. Because if you look at this last buy candle and this last buy candle are the two last buy candles, the two last supply candles that caused the break of this lower low, the break of this structure. So this for me would have been my main supply area. And as you guys can see, this is where the market stalled at, consolidating. And then this is where the market moved away from. So it's clear as the market broke structure. We then come back into the supply, we stalled. This is where demand and supply was, you know, figuring out, you know, what is in control. And then we finally got that movement away that then again broke a new lower low. So that is an easy enough to understand that this candle here is our supply candle that obviously caused this break of structure, because it was, as you can see, we come back, pull back, our last buy candle, break of structure into this low. That is our valid supply area. So again, let's follow the structure on. And what can we now see? And in fact, let's do this break of structure from here. Now let's get rid of that. Let's do this break of structure from this lower low. Now, as you can see, once we broke this lower low, we are obviously expecting a pullback. Now, we naturally have two areas here. So two areas that catch my eye is this candle as a 4-hour supply, which is where we got the reaction from, and also this candle here. So these would have been my two supply areas, which I would have been happy to take. Because guess what, guys? If I don't mark out this one and I expect it to come into this, and I miss out on a trade idea, I've just missed out making a lot of money, a lot of percentage. Whereas I'm happy to go, okay, if the market pulls back into this supply candle, and it, you know, goes right through and I lose 1% of my account, I'm happy with that, because this is my next supply candle. Because if I lose 1% and I gain 3, 4, 5, 10% on this supply candle, guess what? I'm happy to lose that 1%. So understand that. But as you guys can see, let's follow the trend and make sure we're not going off topic. We obviously have this lower high, lower low, lower high, lower low. We have a pullback into this supply. Where does it come into? Well, it comes into this last candle that caused the break of structure. Remember this. I'm going to write this down so you guys can understand. What is the last buy, obviously for a supply buy candle that caused the break of structure, caused a break of structure, or we can say caused a new lower low. So what is the last buy candle that caused a break of structure or caused a new lower low? Well, this is the last buy candle, and this is the last buy candle that caused the new lower low. So these are my two supply areas. Now, the one area that we did react from is this 4-hour supply area right now. So again, absolutely amazing, easy to understand. So what happens here? We come back into this 4-hour supply, and as you guys can see, we obviously had a reaction from there as well, and we broke a new lower low. So let's mark out this lower low right here. And guys, this is happening every single day, multiple times, you know, a week, and you can simply identify this. This simple trick can level your trading up. Just from understanding the 4-hour time frame, supply and demand. Now look at this. Well, obviously, as you can see, we pull back, and we then obviously come and broke a new lower low. So our new range is from this high to this low, this lower low. Now, first thing I want to do is, okay, what is my last buy candle before we broke a lower low? Can you guys, from me, you know, saying it, can you guys identify this? I'm pretty sure now you're getting the gist of understanding. Yes, this last buy candle is what obviously caused this break of structure. It is clear as well, because guess what? Another trick that you guys can obviously understand is To get a better confirmation of a supply and demand, do we have imbalance above or below? Above, below the supply demand area. That is another confirmation that you can have. So obviously for supply, we need to see that we have imbalance below this supply area. So as you guys can see, every single one, before we react into this, we have imbalance here below this candle. We also have imbalance below this candle. Here, when we broke structure, we pulled back in because we also created imbalance as well. If we look at it here, we have this last candle, but we also have imbalance. So that is an extra confirmation that you guys can use as well. It works. If you can see that, it gives you extra confidence anyway. So understand that. So now we broke back into this. What can we see? Well, we broke structure from here. We broke structure from here. Now, as you can see, this happens over and over again. Where do we now come into? Where is our new range? Well, our new range is now from this lower high to this lower low. And where do we come back into? Well, as you guys can see, the two candles, well, the one candle, should I say, that sticks out the most to me is this candle here, this last buy candle here, which is our 4-hour supply area. And what did we get? We obviously got the same thing. This is rinse and repeat. We come down, we obviously come down from this supply, we break this low, we pull back into our 4-hour supply, which is our last buy candle, and then we break a low again. So with that being said, we have another break of this low. Another break of this low to create a new lower low, and then guess what happens again and again and again and again. This last buy candle here is my 4-hour supply candle, and as you guys can see, we pull back to fill in this imbalance and obviously, you know, mitigate this area, and then we move away from this area again. And guys, you can see this clear from me obviously explaining, but I want you guys to go and put some work in. I want you guys to back test this on you know, your charts. Make sure that you get, you know, really deep into understanding structure, you know, understanding what your lower low is, your lower highs and higher lows, and identifying your areas of supply and demand, because you guys can literally level up your trading just by understanding this. You know, it's a simple way to become profitable. Now, obviously, I, you know, do teach people how to obviously analyze on the lower time frames from these supply areas. But guys, you can simply utilize this into your favor by either, there's two methods. You can either in a supply, you can either sell at the top of the area or the bottom of the area. So this supply, you can literally sell and aim for the lower low, and that will literally help you become a profitable trader. Or the second way is you can aim to do middle of the box, which is a better risk to reward. You can do it either way. So this is two areas that you can capitalize on: supply areas and demand areas. Same for this way. Like, look, either way, if you set your trade, your sell limit from the top or the bottom of this box, sorry, and you have your stop loss at the top of the box, or give it a little, you know, room, you can see that obviously from the top of the box, you could have got from and aiming for this low, a 1 to 8.5 trade. If you aimed for the middle of this box with a better risk to reward, you would have got around a 1 to 3.7, 1 to 4 you know, risk to reward trade idea. And this literally happens over and over again. You can utilize this to your favor. Can you identify your 4-hour supply and demand areas? Same again here. This is how you guys can identify your supply and then also utilize it to become a profitable trader. You don't need to always make your 1 to 5s, your 1 to 10s, your swing trading, 1 to 100 trades, or even just your 1 to 3, you know, risk to reward trade. You can simply just aim for 1 to 1s, 1 to 2s, and still become profitable. Now, looking at this, even if you aim for your middle of your box, that goes now to being almost a 1 to 4 trade, and you're just utilizing the 4-hour time frame. And again, I say this over and over, you can rinse and repeat this over and over again. Yes, not always it's going to play off, and yes, the risk to reward is not always going to be the best, but again, it's about becoming profitable. You guys are here to become profitable. Like, obviously, this is a big zone, so I would have wanted to see half of the box at least be mitigated. So I would have missed out on this trade idea. But again, even if you guys got this, it still is a nearly 1 to 5, you know, risk to reward trade, which is again amazing. And we can rinse and repeat this, rinse and repeat. So hopefully you guys can clearly see this from here as well, and understand that if we actually work this out and we aim for this low here, even if we do half of the box, which this would have almost caught, yep. If you guys work out your percentage and back test this, like what could you have caught from just taking trades from the top or bottom of the box instead of halfway? So what can you guys would have made just from doing the bottom of the 4-hour supply areas instead of midway through? Work out your percentage, and then work out your percentage if you would have took, you know, middle of the box, and then figure out, okay, if I would have took the bottom of the 4-hour supply, I would have made this amount. If I would have took midway through the supply, I would have made this amount. And you'll be able to notice like what actually is more beneficial for your trading and what would have made you more money. Would it have, you know, taken trades from the top of the box, or would it have been taking trades from the middle of the box? So yeah, that is how I break it down. I hope that you guys can, you know, I've gotten lots of knowledge from you know, this live analysis of understanding supply. It is the exact same for demand. I don't want to, you know, obviously make this video too long, but we can make a demand one. If you guys comment below saying, you know, make a demand video, then obviously I can catch on to doing that, which is no problem at all. But it's easy enough for you guys to understand once you can identify what structure you're in and identify the right candles and understand that the markets are always reacting from supply and demand areas. So in conclusion, understanding supply and demand areas is crucial for identifying potential price reactions and forecasting future market movements. These zones represent areas where buying or selling pressure is strong enough to shift the market direction. So understand that by analyzing market structure and identifying the last key candle or consecutive candles before a shift occurs, traders can effectively pinpoint demand zones where obviously price is likely to rise, and supply zones where price is likely to fall. Recognizing these areas as we've just identified on the charts on multiple timeframes, such as the daily, the 4-hour, as two key areas, and then obviously refining it on the 1-hour or lower, you know, helps traders become more informed and obviously make better overall improved decisions and also have an improved trading strategy. So that is the conclusion. And guys, I just want to say I appreciate every single individual who has watched this video. I pray that you've got some value. Pray that you've had a little breakthrough from these videos, or from this video, should I say. And I want you guys to level up. I want you guys to give me feedback below with any questions that you do have. I'm here to, you know, help you guys level up your trading. 2025 is the year that I want to see every single individual that's plugging into my, you know, content become profitable. So yeah, guys, I appreciate every single one of you. You know, I have so much love, so much excitement for 2025, and I'm excited to work alongside you guys and help you guys become better traders. So I have been coached by Chambers. Go to my link in my bio. I've got my Telegram, which is free, and my bio, and also my Instagram. My only Instagram. I do have fake accounts out there, so please be careful of that. And obviously, understand that I am not going to message you about, you know, buying something, investing money, or whatever it is that these scammers do. So please be aware of that. But other than that, guys, have an amazing rest of your evening, rest of your day. God bless and take care.